Let's take a look at the economic week ahead, and joining us with hopefully some good news, although my hopes aren't exactly high, economist Sifiso Skenjana joining us. Hello, Sifiso. Good to have you back on the show. Can we talk about the quarterly labour force survey numbers first? I mean, there's been some recovery in certain sectors, but this is an important indicator because it gives us a sense of what's happening on the industrial side in our country. So how are we feeling, positive or negative?
Morning, Gareth. I mean, I think the trends, of course, have been improving when you just look at it in terms of the numbers coming out of the QLFSA, where we've seen unemployment coming from about 34.9, and I think the last print was coming in about 32.9. And so I think that is a material improvement. And of course, I think that came in mostly in the formal non-agricultural sector. So when you just look at those numbers in terms of how they're moving, it seems a little bit positive in terms of, I think, directionally. And I mean, we'll take all the good news as and when they trickle in. I think it's simply around now and saying that, one, is this sustainable? Is this broad-based? And is this, of course, reflective of the true economic activity that is taking place? And I think that's really where you start to have to look a little bit underneath the hood. And you start to see that there's probably a little bit of a pressure point that is coming there. There's the other print that comes from Stats SA, which is the quarterly employment statistics. And that's where you often see the kind of the substitution effect that is taking place from full-time employment and part-time employment. And a lot of people have been now being moved into part-time employment, and we're seeing that continuing trend. And so I think even when this print does come through, and we know that government employment stimulus does also inflate these numbers artificially, but we are certainly hoping that the numbers don't dampen, I think, in a way in which certainly I think does give us a sense around how truly vulnerable our labour force is right now.
Yeah, and it's not coming off a very high base at the moment, isn't it? If I recall correctly, Q3 numbers for unemployment, it was probably the best numbers we've had since the first quarter of 21 as well. So it's not really coming off a very high base. So I suppose expectations need to be in line with that.
Sure, and I mean, I think it's an understanding as well around what's happening in terms of the, people who are in need for not employment, or training as well, or economically active, and certainly understand, are people also discouraged in the context of our economy right now? When you see often, Gareth, when poverty numbers worsen, inequality numbers worsen, often that is a leading indicator of also what will happen in a job market where people become more discouraged. And I think that's one of the things that is an area of concern at this point in time. You are seeing a lot more people not coming through and not reading, the reading not coming through quite nicely in terms of the discouraged word seekers. But we did see a higher absorption ratio in the last print, and so it was a bit of an improvement. But again, I'm not entirely at this point in time convinced that we are seeing a broad-based shift in terms of our ability to create meaningful jobs for, I think, our labour force. And I think there's a big pressure point that's even coming now, of course, on the back of load shedding and the impact that has had as well. I mean, we heard from the Reserve Bank that we expect that to take about 2% of our GDP expectation. And so that's certainly, I think, going to be a big pain as well in terms of what we can expect, particularly, I think, in the next print, Q1, from an employment numbers point of view.
Yeah, we're waiting to see what these Q4 numbers look like from the end of last year, because it's stage 6 that we've been dealing with this year. But the last couple of months of last year, load shedding wise, certainly wasn't kind at all. So we'll wait to see what those numbers look like. All right, then go on, pull the plaster off. How bad is the fuel price going to be, and why is it so bad? Why are we paying more for our fuel just to get to work?
I mean, so, the fuel price has moderated, I think. The oil price globally has moderated quite significantly over the last, couple of months as well. And we saw that also the sanctions that they're trying to put in terms of putting caps on Russian oil also have come through, and then they've dampened the price discovery that Russia can achieve in terms of selling its oil. If you remember, there was also, I guess, a bit of a pressure point when Minister Mandasha had suggested that we could potentially be buying oil as well directly from Russia. And of course, I think that's made a lot of the guys in the other developed economies, I think, take exception to that. But outside of that, I mean, Gareth, simply is that, we are a price taker in the context of the oil markets. And so as soon as, of course, we see swings happening in that particular space, we've seen those prices remain a little bit elevated, following, of course, the slide I was talking about that we'd seen. And it is now about 82, I think, dollars per barrel. But that does translate, of course, directly into what we price into our fuel in the context. But also, of course, when you think about it in terms of, the cost of bringing that in and cost of delivering it to the consumer, that also is quite an expensive piece. I mean, when we look at the report that came out of the Reserve Bank, about 25% of our headline inflation is directly attributable to changes in the fuel price as well. And so when you see that come in, it's certainly, I think, the kind of thing that will also keep our inflation levels relatively elevated at this point in time. But it is, I think, a function of us being also a global price taker in the context of the oil markets.
Just very briefly, Sifiso, I suppose the good news as well at the back of what the Finance Minister, Gordon had to say last week. Yes, the petrol price is going up now. I imagine then come April, if memory serves correctly, that we're going to see something of a relief for the Road Accident Fund and the General Fuel Levy. At least that is not going to kick us while we're down as well.
Well, I mean, there are no adjustments there. And we also heard that for, I guess for parts of industry, I think it's in the retail foodstuffs industry where they do use diesel to deliver or rather, I guess, manufacture foodstuffs, that they would also look at ways in which they give them some breaks in terms of the expenditure on diesel as well. And that would, of course, hopefully also be a delimiter in terms of what we see from food inflation, which has been one of the higher inflation pieces, I guess, when we look at, the broader basket of inflation. And so I think, it's welcome, of course, that there are no adjustments to those, taxes, because I think, it's about 37% of what we are paying in terms of fuel is going to some form of taxation as well. And so I think that is a welcome relief. And I think the relief as well, as I said, to the manufacturers of foodstuffs, which will then also keep, inflation, from running away, particularly from food inflation, which is one of the parts of the baskets, of course, that highly impacts some of the most vulnerable people economically.
Yeah, especially those that are sitting with the minimum wage and those living on social grants. That food basket is such an important number to keep an eye on. Sifiso, thank you. Always wonderful analysis from Sifiso Skenjana, economist, joining us here. Just a reminder, by the way, that fuel price expectation I see here expected for petrol between R1.22, the increase between R1.22 and R1.27 a litre for the price of petrol. Ouch. And then diesel around 28 cents increase for diesel this coming Wednesday. So if you haven't filled up yet, you should have just gotten paid. You might want to put some fuel in the car.